The bottom line is we just are looking at various signals that historically have told us things. And you see gambling, it's not investing. No one's getting into Pepe saying, hey, I'm going to hold this because it's going to be the best quality coin out there. They're getting in it because they think that they can just sell it to someone else at a higher price. And we're seeing so many meme coins, like everyone on Twitter. What's the next meme? Where do I get in? Where do I just throw some money to try to make 1,000%? Not healthy, not good for a market. And show me one bottom of a market historically, whether it's crypto stocks or commodities, that has actually showed that type of speculation. You can't find it.
If you want to see more videos and interviews like this from influential people in tech, finance, and sports, subscribe to the channel and make sure you hit the bell to be alerted. And go a step further and join the YouTube and membership area for early releases of videos like this. I'm out of here. Ha! It's your boy Crypto Blood, and welcome to another Kicking It session. Today, I've got a returning guest. I think it's about his 7th time on CBTV. Always a pleasure to have him on. He's a busy guy, so grateful to get him in here for a little bit, guys. So make sure you hit that thumbs up, smack that subscribe button. You know the routine. So let's get into it. How are you, Gareth? Turbo Trader, I call him Turbo Trader, y'all.
I'm doing really well, buddy. Thanks for having me back.
No doubt. Gareth is the owner of verifiedinvestingcrypto.com and also co-owner of inthemoneystocks.com. How was that service going? I saw a tweet from one of your clients. They're doing well over there on ByteBit.
Yes, yeah, I saw that, man. I saw that. It was great to hear that they're participating in that. You know, it's just one of those fun things where you just, low entry fee and you just try to make as much money, maybe win a Tesla. So you can't go wrong with that. It's fun.
Yeah, absolutely. ByteBit is trying to kick out all the U.S. citizens. That's interesting, right?
Yeah. The way they're acting, man, they're going to really try to make a big push, it seems like.
Yeah, SEC, that's a whole nother topic. We'll leave that for another day. I want to start, though, Gareth, with the debt ceiling. It's a lot going on. It seems like deja vu. It seems like Groundhog Day, Yeah. Every few years we have this situation, okay? And we're now upon it again. What is your take on Yellen saying that it's a calamity unless they raise the debt ceiling? It sounds like a repeat of history. What's your take on what's going on? I think she said something about like not enough cash to cover Social Security and Medicare payments that are due. What's your take on that situation and what impact it may have on the markets?
Yeah, so I mean, I think the first thing is that as the Secretary Treasurer or whatever she is, she's gonna make it sound like it's like the end of the world, right? She has to instill fear so that people put pressure on the politicians to get some sort of deal done. Now, historically, this really hasn't been a big deal because on the, at the 11th hour, they passed some deal because no politician wants to be looked at as the responsible party for having the U.S. default. However, of all the times, this is probably the one I'm a little bit more nervous on because you actually have politicians in there that don't seem to give a crap. They just want to make their statement. And I think that's a little bit new. It seems like every cycle for politicians, we get some new kind of people involved where whether they're on the Republican side or the Democrat side, they definitely are like, listen, this is the way it's going to be. I'm not going to budge on my side and screw everything, right? And so I think this time you want to be a little bit more careful. For me, the way I'm looking to trade it, for instance, would be to kind of towards mid-month, and she talked about June 1st. So mid-month, if the VIX is still low, I'm going to accumulate a little VIX because that's the volatility maker. I think you'll see investors start to buy protection by buying the VIX in the second half of the month if no deal is done. So I think as long as it's low and it hasn't rallied up significantly, that would be a nice, interesting trade going into potential worry in the markets.
Gotcha. Now, Biden and McCarthy, they meet on Tuesday. It'll be the first time since February, so
yeah,
maybe we'll make some headway. But my whole stance, though, Gareth, is like, why even have a debt ceiling? If we increase it every few years, what is really the point of a debt ceiling? Is it to keep our foreigner investors feeling like we're fiscally responsible, or what? What's your take on that?
Yeah,
I know we're not.
I know. I mean, it is kind of a joke, right? I mean, to have this debt ceiling that has to be budged every X amount of months or years, but then you always raise it anyways, and it doesn't really end up mattering. So I agree with you. I think it's more like if you're going to ask foreign countries to finance us, just like, if I'm running my household and I'm like spending money left and right, not paying off my bills, the bank's probably not going to give me a loan. So I think there's something to that where as long as they say, okay, we can only spend X amount before the next time we have to vote on it, maybe it coerces these foreign governments to give us more money. It's ridiculous, though. At this point, it is absolutely ludicrous.
What's your take on it? The likely outcome of this situation? Do you think we get a can kick and just a temporary raise of the debt ceiling, or do you think we get something more permanent?
I think a can kick. I think that's the only way that the Republicans are going to be strong on this one. They really want to see spending cut. You mentioned before the Social Security Medicare side, where
Yes.
the government may not be able to pay people Social Security. That pisses me off even more, right? And the reason that
Mm,
pisses me off even more is that people paid that money in. That's actually their money, right? If you're getting Social Security, you paid your entire career into
yes.
Social Security. So, like, I mean, it's one thing to say, okay, well, we don't have enough money to pay this or that, but like, freaking give people their money back, right? I mean, so I
Right.
don't know. You get me off on these tangents, and then I start losing my mind.
No, I hear you. It exposes that the Social Security and Medicare system is a straight up and down Ponzi scheme.
It is. It
The
is,
money
man.
coming in is paying the liabilities that are current today, that
Which
are due today.
and which, by the way, is just one more reason why there's long-term viability for Bitcoin, right? I mean, for
Hmm.
cryptos in general. I mean, again,
Yeah.
not necessarily the cryptos that can continue to expand exponentially that don't have the non-fiat aspect to them, but I
Right.
mean, shit, if we look at what happened with the banking crises recently and how
Yep.
that just proved to us why we need Bitcoin, well, guess what? Here's another example. I mean, you got a government that inevitably will raise, and then they owe X amount to Social Security, which is they owe us our money. They're going to have to print that at some point. I mean, there's just endless printing that will go on. But I think investors also need to recognize that that's a long term issue. It's not something that, like, I'm not going to buy Bitcoin today because all of a sudden
See,
we see those
exactly.
issues,
That's how
right?
I feel.
So
Exactly. That's exactly how I feel as well regarding Bitcoin. And we'll get to that, and we'll also get to the banking crisis as well. I want to touch on the economic calendar for this week because the markets are looking at a few key dates this week. Nothing really going on beginning of the week, but toward the middle of the week, we have Wednesday. We have the CPI month to month, year to year, and core CPI coming out. And then also Thursday, we have core PPI month to month and unemployment claims. These are two that I'm really interested in seeing what happens here because I believe, and you can correct me if I'm wrong, Gareth. I think the Fed likes to look at the PPI a little bit more than the CPI. What's your take on which direction and which metrics they're looking at this week as far as being more important?
yeah, so I think CPI and PPI will be hugely watched by the market as an indicator for the Fed. The only thing I would say is it's interesting because I do think that the Fed is probably now on pause. They're not going to cut rates, but I do think they'll probably not hike the next meeting, which I think is about in a month and change, before there's a 2 month period where there's no meeting. So I do think that regardless of what the numbers show, I would be very shocked if the Fed was to hike again, considering the stress on the banking system. Like you said, we'll cover that in just a little bit. But those numbers will be cued off of. So, whatever we see the CPI and PPI numbers come out, you're going to see the dollar make a move. You're going to see interest rates make a move. And then what we know is crypto, as well as stocks and commodities, will trade off of that, whether it's gold, whether it's silver, whether it's stocks in general. That's going to be a driver for this week. So, it definitely is. And by the way, you can see today where, at least in the equity markets, things are very quiet. We had Apple, we had
Yeah.
the non-farm payrolls last week, we had the Fed. Now we have this little kind of period, what I call a hangover, where everyone got too drunk on that kind of stuff. Now they're like feeling it until Wednesday when they get the PPI numbers.
So do you think which is more important to the markets? Is it the PPI or the CPI numbers for the markets?
Yeah, you believe it or not, historically the CPI has been more important, but I do think the Fed looks at the PPI more because it's a
Uh,
leading indicator, right? So
I was
if
going to
you
ask
look
you
at
about
so
that.
the way it usually works is on the producer price side, are those prices going up or down? Because remember, the producers, if it coming down, then within a few months they'll pass that savings ideally on to the consumer. If prices are going up for producers, well, guess what? They're not going to sit around for very long and take those losses. Eventually, they'll pass it through. So the PPI can actually be looked at as a leading indicator for the CPI.
Yeah, it's interesting that I don't know. I'm not in the pause camp yet.
Really?
I no, not yet. There's an article out actually. I wanted to show you this one. UBS is saying that jobs data suggests markets too upbeat for a pivot. Now, a pivot is different than a pause.
Right.
Okay. We got some numbers last week regarding jobs numbers, and they were very hot. I was actually surprised that
It
they
was.
beat the estimates by a wide margin. Do you think that that is enough for them to pause, or do you? Because when I saw that data, that made me think maybe another quarter basis point.
Yeah. I mean, the only thing that kind of made me think that they were going to pause is number one, Jerome Powell kind of alluded to that, and he doesn't like to surprise the market. So if you look at the Fed funds futures and what they're pricing in, they are pricing in pretty heavily a pause next month. So that leads me to believe that the Fed won't want to surprise things unless the economic data gets really out of control. The other thing to keep in mind with the non-farm payrolls on Friday, the Federal Reserve had those numbers, or at least the approximate numbers, on Wednesday when they made that decision, and he gave those commentary. They always get the numbers a little bit ahead of everyone else. So I do
Right.
think taking that into account, he probably was aware. And I also think that if you look at some of the underlying factors in the non-farm payrolls, there were some signs that there were some weakening trends. Not in the
Hmm.
headline numbers yet, but there were a few little signals. So, the other question too is the Fed has to be aware. I mean, this is what drove me nuts about that. I mean, Jerome Powell stood in front of everyone and said, "Hey, the banking system's
Yes,
stronger. It's doing
I was
fine."
gonna get to
And
that.
then,
Yep.
and then, and then the banks collapsed, literally 50%
Yeah.
down for Pac West and some of these other
Yep.
ones. And so the Fed has to be acutely aware that every time they raise 25 basis points here on out, you're basically putting another knife in the back of the regional banks. And so there's going to be a point where he's going to cause more catastrophic impacts. And the question is he ready to deal with that? And I don't know, man. I don't trust the Fed here. I think they're totally out of their comfort zone.
Yeah, they're in the corner, man. They're in what's called a quandary. It's a quandary they got going on with themselves over there.
Self-made, by
Uh,
the way, self-made.
self-made for sure. Speaking of everything is fine, right? The American Bankers Association CEO
Mhm.
also said something very similar to what Powell said. He said things are absolutely stabilizing. Is
Yeah.
this is just a coordinated effort by the powers that be to try and calm the markets, or do they really think, is there literally hubris here where they think things are isolated, these are one-off, a multiple of one-off events that really have no correlation or connection? What's your take when you see things like this?
So I think there are some banks, right? I think the bigger banks are stabilizing. Like USB is kind of right behind the JP Morgans, the Morgan Stanleys in terms of its size, even though it's a regional bank. And I think that for those banks, the fact that the Fed is basically any bank that's failed, they've said we're gonna pay out. The FDIC has said they'll pay out all deposits, right? So I do think that takes a little fear. Like I'm not worried about losing anything over 250 in any account that I have at a bank because again, it's very clear that the government will cover that. So I think that does take it down a notch. My biggest
Mhm.
question is like how much are these becoming zombie banks, right? Because you not only have what's going on with consumers
Now,
hunting.
zombie, are you talking about the national banks or more regional and local banks that being
Right
zombies?
now, regional, but I do think
Okay.
it can spread, right? And the key is you have all this kind of flight to higher interest rates that we're seeing, leaders inching out. But then also there's this what the Fed is not talking about, but if you look under the kind of the hood of the markets are starting to pay attention, is the commercial loan defaults that are starting. And this is going to be a whole nother wave that probably hits in the second half of the year, maybe the fourth quarter. And that's now going to have a huge. So all these banks have all these massive, they have these bond portfolios that are paying 1% when everyone else is rushing to get 4 or 5% on them. And that again is a huge loss on their balance sheet. They don't have to market that, by the way. So they're carrying these massive losses, which is why no big bank like JP Morgan. Remember, JP Morgan could have bought out the bank that failed, FRB, I think it was. But instead, they let the FDIC take it over and then they bought it at auction. And the reason why they're doing that is because
Quote
as soon as a
unquote
bank,
auction.
what's that?
Quote unquote auction.
Right,
It was a
right.
rigged.
I mean, and by the way, the deal was amazing. Like, if I could have
Yes,
gotten
it
that
was.
deal, I'd be a billionaire right now. Just put it to you that way.
Exactly.
It was incredible. But the key is they don't have to mark to market unless they get bought out. And so all these banks are carrying these billions and billions of losses, and it's not even
Mhm.
taking into account the commercial real estate defaults that are coming now. So that's what I mean by zombie banks is are they just going to be like this bank is negative $100 billion, but because they don't have to mark to market, they can still operate. I don't know.
What was your take when you first heard, I'm sure you were watching the FOMC. I did a live stream during the FOMC. What was your take when Jerome Powell first comment? I just want to make sure you guys know that the banking system is sound and resilient and everything is fine. Like, what went on in the back of your mind when he said that?
Yeah, so to me, it's in my head, I think, yeah, and this guy was the same guy that told us that inflation was transitory, and now he's predicting just a mild recession, and now everything's fine. I mean, it's someone who probably doesn't want to cause panic, but at the same time, I think a little truth would go a long way in this scenario. Where, like, if he just said, "Yeah, there's some issues in the banking system, but we are on point. We are going to attack it. We are." I mean, that's so much healthier for us to hear
Agreed.
versus when everyone knows you're BSing. Like, that doesn't build confidence, you know?
No, it doesn't. No, it doesn't. And first thing I thought of was Bernanke,
Yeah.
'08, this '07 or early in '08 when he made that comment, everything is calm. And I think even Janet Yellen did the same thing. So it's
They
just
all
like,
do, right? They all
they all
do.
do, right?
And you have to wonder if they know, but they're just trying to keep things calm, or do they not know and they're just oblivious, which is even scarier to me.
Did you reposition after hearing that message, hearing that statement? Where did that make you change your investment trading thesis?
So what I did do is, and check this out, is this is kind of a counter trend thing, but when we saw those dumps on those big banks, I did
Hmm.
do a little fishing. I bought some KBE, which is the banking ETF, and I also picked up some USB. Both bounced the next day really nicely, and I took profits already. I'm not sticking around there. But there were basically anytime this type of stuff happens, it creates volatility, which for us as swing traders is a gold mine, right? So
Correct.
volatility, when you see panic hitting and banks are down 50%, I'm not going to buy the bank down 50% because that could be halted and taken over and go to zero. But I will
Yeah.
play the best of breed ones in the panic.
Gotcha. Next, speaking of banking turmoil, this one economist is saying that this U.S. banking situation is way bigger than the '08 crisis,
Yeah.
but the real storm hasn't even hit yet. Do you see it getting worse from here? Do you see contagion starting? Because I don't see contagion at this point.
Yeah.
Honestly, it's more of one-offs and really based around interest rates, right? People are chasing yield, so they're
Yeah.
fleeing these smaller banks for either bigger banks because they're scared or going into treasuries. Is this the start of something more, though, in your opinion?
To me, it's not the start of something more in the banking sector at this stage. I
Okay.
think, like, you're seeing the same thing I'm seeing, is that people, it's people chasing yield, which is what a normal person's going to do, right? If you're making 1% here and you can make 5 over here, well, hell, that's free money. Might as well go get it. What I do worry is that this is one of those, like, pre-tremors before a bigger earthquake. Like, the Fed has raised rates so quickly in this situation, we started to see things break in the banking system. At some point, something in the economy is going to break, and we are going to go into a recession. And my biggest fear is that the Fed, because inflation is still elevated, they're not going to be able to come to the rescue like they did in 2018, like they did in 2009, with easy money policy. And so where does that put us? Does that put us in a long bear market? Does it put us in a long-term recession where literally we could be in a recession for 2 years, 3 years before we're able to get
Mm,
out of it? And the question then is, how bad do balance sheet look for stocks? Like, for me, I look at a stock like Apple trading at a forward PE of 27, and I understand it's a safety hedge right now. But if we get in a recession, how do you justify that price to earnings? I can't personally. It's ludicrous.
yeah,
By the
I,
way,
I
I know we'll
I
get into
agree.
crypto, but, like,
Yep,
you want to know something that really freaks me out is when I see the gambling. You can't call it investing, but the gambling going on
we're
in
gonna talk about
crypto
it.
with
Yep,
these
Pepe.
memes.
We're gonna talk about
Yeah.
Pepe.
All
Yep,
right.
that's so crazy, bro. You're
I'll
on
keep
it.
it quiet
You're
until
on
you
it.
bring it
You're
up.
on it. I wanna ask you about this chart. I don't know if you've seen this one. I saw it
Mhm.
first on Blockworks last week, and very, very great map here. I don't know who put this together, but it really, to me, really illustrates the magnitude of this, if you want to call it, banking crisis that we're in right now. Now, there were 440 banks that actually went under after the
Mhm.
'08 crisis. And you can see that large mountain of banks. Those are all banks there, those circles. Now, you zoom into today, there haven't been as many, but the breadth, the largesse of it all. They're
Yeah.
way bigger, okay? And we don't even have Credit Suisse in there. These are all US banks. What do you when you see something like this, do you really think that there's something really brewing under the hood?
Yeah, I do think you have to pay attention to it, and I think that you see that three banks equaling that amount of deposits and
Yeah.
that amount of money is pretty scary in the scheme of things. And again, the question is, and this is what my biggest fear is, as you see more. And by the way, I think in the mid '90s there were 14,000 banks in the U.S. There's now 4,000, and
Oh
obviously more
wow, I
are
didn't know
failing.
that.
So we've already been
Didn't
on
know
this
that.
trek where it's less and less banks. And I hate to say it, but we're on the pace where eventually you're going to have 4 or 5 banks, and that'll be the
Just
only
like
banks in
Canada.
the U.S. And essentially, what they become is government owned, right? I mean,
Yep.
not literally government owned, but the point to be where they're too big to fail, so the government will always backstop them. And that's just this is just a rotation towards the ultimate outcome that's not a healthy outcome. Where again, the government will backstop them, which means more printing of money, more this and more that. They mess up, and that's yeah, it's just not a good situation.
Screenshot that, pause and check it out. It is insane to show the comparison of where we are with the number of banks versus the size of the banks that are failing now. Something to definitely think about. Now, speaking of banks, I think they're going to do something very, very wrong here. Banning short selling
Yeah.
on banks. What is your take? We're traders, so we actively trade. We go long and short, and you understand the market mechanics. This is not a good idea, is it?
No, and they tried this, by the way, in '08, '09, and it actually was a miserable failure. They
Yeah,
so they banned short selling in the banks, I believe, back then, and it didn't keep the banks from falling. In fact, you could argue that it actually pushed more selling pressure. And the thing
exactly.
is once you start to manipulate, investors that are long don't trust the system anymore either, and they'll just start to sell and say, you know what, if they're manipulating here, what's the next step? Them saying, hey, I can't sell my shares or I can't do this. And then before you know it, people are like, all right, then I'm just 100% out. This is a play by the politicians because they don't understand the markets. They don't understand psychology of human behavior. And it's high time they get someone involved that does, I think, understand that.
Yeah, because when you ban it, the short selling, when you short, you have to cover.
That's right.
That's buying the stock. So
Why?
you get some relief rallies in
That's
between
right.
those drops instead of a just straight out
Straight down.
sell the actual asset and then there's no one to buy. So it's like gaps and you're
Yeah.
just crashing, right?
Yep.
That's what we're
That's
going to
so
see, it
true.
seems like. I saw another chart that showed at the point, like you said, in '08, where they banned shorting and the markets just crumbled right after that.
Yep.
So I hope they don't. But for us as traders and for those watching, if they do, this may be a great opportunity for you to really go in short or
Yep.
sell or whatever that you can do at that point.
It's true, man. It's a shame that the politicians don't have more insight. I feel like the politicians generally get involved in a lot of things when they don't have the facts. They try to do what's popular, but that's not always the best thing, and that's the way our system is set up. So it is a shame.
Yeah. Speaking of a shame, in my opinion, I don't know what's going on with Coinbase and their coin popping up 14% on their earnings,
Mhm.
which it was earnings, but then they also at the same time reduced their expenses. So it's like, I didn't look deep into the balance sheet and the report, but
Mhm.
what is your take? I'm bearish still on Coinbase. What is your take on Coinbase, and are you trading that at all?
I haven't traded it since earnings, to be honest. They did have a good report, but like you said, it was mostly due to the fact that so number one, crypto's gotten a little bit more popular, so that's drawing in more people to trade. And number two, they cut expenses. And what we've seen, whether it was Disney, whether it was Meta, when these companies cut expenses, investors are actually cheering that by buying
Yeah,
the stock. So I think that's part of it. Is that as we go into a recession, cutting expenses is going to be more and more popular. And
correct.
so I think that's what you're seeing there. But at this point, it's a no touch for me. I ultimately think if you looked out 5 or 10 years, Coinbase probably is lower, mainly
Hmm.
because as competition grows, as regulation comes, the fees they charge are ridiculous, to do a buy
They
or a
are.
sell, and that will come down. If you go back to like
Exactly.
the late 90s when I was trading, it cost me $30 to buy a stock and $30 to
That's
sell a
right.
stock. Now I basically do it for pennies
Zero.
on the dollar, right? Yeah,
Hmm.
exactly. So the longer term will eventually bring those down, which means that they're going to have to figure out another way to make profit.
I think in their earnings report, they did say they had a increase in fees for their services. I don't know what services they're providing, but it was interesting to see that institutional money
Yep.
was a large portion of the increase in business. So
Interesting.
retailers weren't anywhere to be found, which it lines up with the beginning of the year. We've been on a kind of a rip for Bitcoin and the crypto market since January, anyhow,
Yeah.
right?
Yeah.
So it lines up with institutional traders buying up this market. Now, you mentioned it, and this is a sign to me that we're still got lower to go,
Yeah. Me
because
too.
when I see stuff like this, Pepe coin going up 2,000% in a month, I said, yep, we still got some froth in the markets. We still got some lower to go. What's
Yeah.
your take on this recent meme coin rally?
Well, number one, you and I are not the most popular out there. That's for sure. When we
I
say these
know.
type of things,
Yep. Yep.
we get the brunt of the hate out there. But the
Yes.
bottom line is, we just are looking at various signals that historically have told us things, and that's what it is. I mean, when you see gambling, and again, it's not investing. There's no one's getting into Pepe saying, "Hey, I'm going to hold this because it's going to be the best quality coin out there." They're getting in it because they think that they can just sell it to someone else at a higher price. And we're seeing so many meme coins, like everyone on Twitter. What's the next meme? Where do I get in? Where do I just throw some money to try to make 1,000%? Not healthy, not good for a market. And show me one bottom of a market historically, whether it's crypto stocks or commodities or anything that is actually showed that type of speculation. You can't find it. It's not out
Right.
there. This is the sign of a top, not a bottom.
Exactly. It's down 33% today,
Hey.
ladies and gentlemen. And I think it's got a lot more to go, especially if
And I think
crypto,
from the high of
Bitcoin
just the
continues to roll
weekend, it's
over.
probably down like 70% already. So,
Yep. So
yeah,
you would have
man,
lost
it's
70% of your money, ladies and gents.
yeah,
FOMOing in. We warned you. I know I did. I'm sure Gareth did as well.
yeah.
Can you talk to us about, in general, some TA? Let's get into a little
Yep.
TA and let us know what your thoughts are on the current market structure
Mhm,
and technicals on Bitcoin. Here's my chart. We've broken the blue trend line that I had drawn here for quite some time.
mhm.
And that to me is not a good look for us trying to head higher. Not a good look for the bulls at all.
Yep.
What's your take on maybe the next 3 months with Bitcoin?
Yeah, so I don't know if you could pop up my chart there. So basically, I talked about this for months in advance about the 30,500 level, and again, psychologically, that is like the major point of contention here. It was a level where, for me, it was a pivot point whether or not the low was in or not, and so far we haven't broken through it. So the low to me is potentially still not in crypto. The level, why psychologically it's so important, it was the beginning of this mega move up to 65,000. It was the dip lows and then the move up to 69, and then we came in and consolidated before breaking down. So essentially we've just reversed that move. If we zoom into the current price action, you do have some bearish stuff going on here, right? Number one, you still can't take out 30,500. You have a
Mm-hmm.
level here at 27, which I'm watching closely, but you could also make a case that there's a pretty clear trend line. I mean, maybe even going back to here, or we can just kind
Yeah,
of
there you
slide
go.
that up
There
underneath.
you go.
And
Mm-hmm.
that's another concerning thing. So right now we haven't broken it. So you got to give it credit for not breaking it yet. But if this takes out to the downside, then that's where trouble really gets started. And yeah, I mean, to me, to see so many bulls out there, I don't know if you're saying that there's potentially new lows to be seen in
Yes.
Bitcoin as well. But
Yes,
again,
I am.
I would say you and I are probably one of the only people out there. I think there might be one or two else out there talking about that. It's certainly not the common perception. But to me, this is a bear market rally. And look at 2018-19. You had rallies that were percentage wise bigger than what we've seen here, and we still came down and
Absolutely.
made new lows, or at least touched the same lows out there. So I do hope people are careful. I think the government on purpose is not unveiling regulation because they want to unveil their stable coin, their CBDC. What concerns me and what I think a black swan could be is if the government unveils the stable coin, the CBDC, where does Tether fall in the mix there? What's the purpose of Tether if we already have something that the government has that's pegged to the US dollar anyways? And so then, I mean, I don't know. If all of a sudden Tether's not as useful, does it then create more instability? I'm not sure, but I do think investors need to be very careful.
So speaking of CBDCs, my trading guys, partners over at Silver Harbor Capital sent me something about 17 hours ago. I didn't get a chance to read it. Subsidiary Genesis, 630 million. Gemini has warned there's a risk that DCG will be unable to pay their debts and default as a result. You want to touch on DCG? Do you know anything about that situation as of late? DCG and Gemini's situation?
I unfortunately don't know much about it. You
Okay.
probably know more. But having said
No,
that, I do think that that investors have to pay attention to these little things because I mean I know I just saw I think it was Binance saying that they had halted Bitcoin payouts at one point for a short period of time. So there are underlying issues going on in the crypto markets. And by the way, I don't know a whole lot about gas fees either, but you know, Ethereum, I've seen so many comments
it's
about.
horrible.
I mean, you know,
Yeah.
how is Ethereum valid in the future unless they get those gas fees down?
It's so funny you bring that up. I actually had this article queued in here for us today, but I didn't think it would be really applicable. As you stated, Binance did briefly halt withdrawals for Bitcoin's network, which is interesting to see. But more importantly, I was talking to some of my Bloodalytics members, and they were complaining about the gas fees on Ethereum. I don't
Yeah,
know if he was trying to interact with a smart contract, but the fees were like $135
it's
for him to
ridiculous.
interact. And so
Yeah,
what I told him though, Gareth, is that it actually shows me that I look at the glass half empty on that scenario. It shows that people aren't actually, or haven't been for many months now, maybe even more than a year. People aren't using these blockchains. They're just simply speculating on the
right,
price of them, because if they were using them, these congestions would be common. They would be
right,
every day.
right.
So it's just interesting. I'm wondering what's going on where people are actually moving assets and value across the blockchain. What does that mean? Is that a harbinger for something?
Yeah, no, I agree. I think that is an issue out there, and I think your analysis is dead on. Is that it is concerning to see the gas fees that high. There's got to be something that's done if these are long-term viable, useful things to get that to a reasonable level.
Yeah. All right. This has been awesome. Did you have any last takeaways for people to think on?
Just again, watch for me, watch that 27-ish thousand level on Bitcoin. If we take that out to the downside, I think you probably have more downside to go. At least 25 would be 24 to 25 is my next support level. And again, just be aware that kind of keep your ears open to CBDC information coming out from the
Mm,
government and to those type of things, and just watch how it behaves. And last thing I'll say is just going back to the speculation going on. Gambling, which is what's going on in these meme coins, is not it's actually not even a good thing for crypto in all. We talked about this with
mm.
Dogecoin and SHIB back in the day. It's not good. It's not a healthy thing for it. Doesn't make people say, oh, crypto's the future. If anything, it makes people more wary of the situation. So great to
Yeah,
make money if
probably.
you're first in and you get out early, but other than that, it's not a good thing.
Yeah, it probably speeds up the regulatory stuff as well
And
when they
makes it
see
more
this.
harsh too. Maybe makes it more stringent, which is not a good thing either, maybe. Yep.
Exactly. Well, there you
Cool.
have it, guys. Gareth Soloway, once again, another great kicking a session with him. Make sure you guys go follow him. I'll have links in the description of this video for that. Verifiedinvestingcrypto.com. Check that out as well if you guys are interested into following some of his trades on the crypto side, and inthemoneystocks.com for the equity side. Gareth, again, it's a pleasure. Thanks for coming on, man.
Such a great discussion. Thanks for having me.
All right. Holla.